Hey guys, hope you are all having a good morning today. One of the biggest and hottest topics in both economics and politics is currency manipulation. In this channel, we have talked a lot about American currency and the many problems it has, especially as we emerge in a world where the dollar dominance seems to be threatened by the other currencies, such as crypto and the ever-growing Chinese yuan. One key factor that will determine the course of the future is Chinese's government currency manipulation, which is a very controversial and widely debated topic. You have probably heard it on the news or at the table having dinner. China finding itself once again in hot water as the world scorns at their latest actions regarding currency manipulation. But what does that mean? What does it really look like? And how much power or control does it give China? Today we are going to break this down as best as I can. I might make this a whole series, so this video will be me testing the waters by giving a broad but thorough explanation as to Chinese currency manipulation. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Let's begin with some very basic concepts before we start drawing in China into the picture. When it comes to exchange rates, there are two primary measures by which two countries use at a given time. The first one is a nominal exchange rate, which measures the amount of one currency you can get when you trade your currency for another. This is the rate you see at the currency exchange rate when you see an amount of dollars for another amount for euros. The second measure of an exchange rate is known as the real exchange rate, which sadly not a lot know about, when it is actually the more important and sophisticated one, as you are about to see. The real exchange rate can be described as the measure of the amount of a country's goods you can get in exchange for another country's goods. In a simpler way of thinking, the real exchange rate is just a nominal exchange rate adjusted with certain prices differences for goods between countries. Because market conditions change every day, both the nominal and real exchange rate experience a lot of volatility that needs a lot of control, and it is in this control where we start finding problems, in particular with manipulation. The real exchange rate is vital for currency value, because it drives the trading balance between countries. The issue with China from the perspective of the United States is the degree of synchronization between the United States trading balance with the trade balance of China. Every time the real exchange rate between the United States and China falls, China's share of U.S. trade deficit rises sharply. A trade deficit is the difference between imported foods versus exported goods. It is common knowledge that most of the production in the world happens in China, which is argued as to why China has so much leverage in the trading balance. Before we get to the implications of this, I still don't feel satisfied with the explanation of how exactly China manipulates its currency, so let's be direct once for all. Chinese officials use two primary tools to manipulate currency. One is the central bank, which sets daily reference rates, and the second tool is when the central bank itself buys or sells dollars. The central bank has to intervene to keep the value of a currency trading within a defined reference rate. Within this defined reference rate, prices are set by market forces, but it is also where the Chinese central bank likes to do its magic, because they can hide most of it for the most part. Their central bank is allowed to intervene, and as you might guess, they will typically make small adjustment to prices to benefit themselves and their trades. So, where does this lead us? Now that we have a basic concept of where and what the manipulation is and takes place, let's now explain it once again, but this time bringing in the US and China. As you know, the value of the dollar is still very strong, even if it's weakening. Americans have a lot of purchasing power abroad in other markets, which is why we like to buy from China, because everything is cheap. But, by the same token, American exports are expensive, which makes other countries not want to buy from us. When the dollar is weaker, it can buy fewer goods, but simultaneously makes American exports relatively cheap for foreign buyers, driving export numbers higher. Countries use this game and try to rig it to their favor, and this is where China comes in. China likes to sometimes weaken their currencies at precise times and dates, holding the value of its currency so that they can lift up their exports and thus, enhancing their economic development. It was through this manipulation of currency that China was able to propel itself as the world's preferable factory, because it manipulated its currency to be the cheapest when needed and more well-rounded when it made more sense. Economists estimate that it was because of it, China's economic transformation led the disappearance of at least 1 million American manufacturing jobs too. How the United States should respond to this is very hard to answer, for no answer is perfect, and could unintentionally create serious unintended consequences. You see, cheaper Chinese goods benefit US consumers, but cheap Chinese goods hurt US producers, since they are losing market share to foreign companies in China. When we start imposing tariffs in China, they quickly offset that increase in tariffs with further currency changes. It's a problem where every action we take is directly mirrored by Chinese officials and the effects go nowhere, except for more political upheaval between the two countries. Taking any direct action against China might not benefit the US because domestic consumers benefit from China's artificially low prices. This is why the issues cannot be amended with responses to what China does, because it will be pointless. We are in a paradox, where all doors and stairs lead to the same origin point of no change. As such, given that any reaction will conclude in an equal state of affairs, I think the best path would be to finally start asking the hard questions politicians and economists alike fear asking the most, which is, has globalization really benefited the United States as a whole, or has it forsaken our economic reign in the world? We live in a capitalist society that loves and encourages free markets to do as they please, but without close and strict guidelines, we end up where we are. Globalization did allow for many amazing fixes to the general well-being of many countries, as global chains of production allowed for many countries to participate and climb up. However, the changes have not been all good, and the costs continue to be ignored by politicians of all parties alike. Consumers will always go for the cheapest alternative, and this will be made worse when companies in your own country outsource all the jobs to a country like China. It gives us no power or leverage to really have a say on any matter, which is what we are seeing. The last administration, for all its faults, did correctly accuse China of being market and currency manipulators, and for starting and engaging in uncalled trading wars between them and the United States, along some other developed G9 countries. China prospers at the detriment of our ability to reinforce our production factories and ability to become a more competitive exporter in the globe. To truly impact the strength of the dollar, we need to adapt and force some serious regulations and stricter taxation laws that make exporting jobs outside the United States economically unattractive. A good follow-up question regarding this becomes, wouldn't that prices higher since the cost of labor in the United States is higher, thus making the final prices higher for consumers? The answer to that is yes and no. Again, China is cheap because they cheat themselves through their central banks to be cheaper. They change their numbers up in secret, though not a good well-kept secret since everyone knows about it, and then pass it off. The only reason they are successful is because the United States has no leverage to stop them, because the only way to make things balanced and fair would be for us to have a real counter-response to their cheating by becoming a better alternative for exports. Once we export more, and establish better regulation and taxation laws that give companies a lot of leverage and incentive to operate within the US, you will see China's currency crumble and then they quickly being forced to become more fair by not cheating and providing better value for their product. Listen, offsetting cost for US producers can be done through something like a short-term adjustment stipends. The real reason why none of this is being done is because major corporations pay big money to politicians to not take any measurable action, because it means their margin profits would be greatly impacted. If for every dollar that they generate through revenue they profit 75 cents, a change like this would balance things out would mean that they could instead only profit 25 cents, which to the overly paid CEOs and board members is a huge no, as well as for the Wall Street goons who impede any necessary change for the betterment of our currency and overall stability. So long as the United States continues to allow China to cheat the system, the more leverage and power they will give them, and slowly others will come to accept the yuan as a more attractive offer. Already they are releasing their digital currency soon, which is set to try to upend the dollar even further across the globe. The United States has a lot of distance to catch up, especially when our own Congress does not even acknowledge the strength and power China is slowly cultivating. I hope to have inspired some wrinkles in those smooth brains of yours this morning. Thank you for making it to the end of the video. Let me know your thoughts and comments below. I have no measure to tell if you enjoy this type of content other than your feedback, so go all out down there. I know this video was a bit harder and more complex to understand, so do let me know your thoughts on it. I just want to make sure I was clear enough to be understood. We finally made it to Friday, let's try to end it as strong as possible. I will be finalizing my Discord this weekend. I cannot wait to get that done and bring you all in. I made some changes to the Discord, where for day trading scalps only my Patreon members will have access to it, while the rest can just come and hang out in the lobbies and talk about GME and AMC. I will give a more exact description tomorrow or on Sunday with invite links, so stay tuned and be sure to follow me on Twitter, link is in this video's description. I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Hope you keep having a great day and I hope to see you later today on the recap video. Until then, keep on buying the dip and to the moon.